The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as the dust settled on the September WASDE report and Thursday's trade action, kind of just felt like a normal trading day to some degree. There wasn't as much volatility as one would expect on a report day. Did have a good close in the soy complex. Corn worked its way off of some initial lows post-report and finished with a little bit of green. Mixed in wheat, good follow-through day in cattle. Plenty to talk about and take a look at here as we assess the September WASDE and more. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again, and a report day that well, I'm sure we were both busy, but maybe not as busy as we've been in past report days. It kind of was a quiet one, all in all, minus a few changes of note from USDA, Brian.
Kind of reminds me, like in corn, one of those games where you kind of put the dice in the cup and shake it and then roll it out, and it's the same dice as last month. So,
Yeah.
or last roll. So, yeah, corn in the same way that the closing price, penny and a quarter higher in December corn, 406. I'll call that a victory for corn because we are heading toward the harvest season, and it looks like things have dried down. Things are going to move kind of quick, and are moving quick. And corn is still holding about 20 cents off its recent low. We're in that 385 area, now 406, up a penny and a quarter today. If you're bullish corn, pretty good close, and I'll tell you why. It's not that the close higher was so significant, but the market after the report did take a pretty good slip, moved through some big moving averages, and we were talking the 50-day, the 40-day, the 10-day, the 21-day, went underneath all of those and ran out of selling interest. And then the buyers kind of clambered in and clawed it back. So you have an outside day, which means that today's high and low were bigger than yesterday. The close was higher and is above those resistance point, and you're developing a really nice, impressive, what's called or known as a pennant formation. And so that might give a signal that the market is ready to move higher. The only problem is you're running in the harvest right now. So I just think that the pipeline is going to be somewhat full, and it'll be really challenging to get the market to rally. Beans had an impressive close, 10 higher there. Carry out, let's call it neutral. And sounds good today, but just puts beans back where they were a couple of days ago and where they were a couple of days before that and almost a couple of days before that. So they're really just consolidating. There, I think the support is coming from beyond the USDA report, which was neutral. Expectations that maybe this yield number is going to have to come down a little bit.
Yeah, and thinking about these yields, I think the trade was a little surprised that the overall national corn yield ticked up slightly. Soybeans left unchanged, and we were talking about this before we went on the air. You look at some of the state-by-state breakdowns. Some of these make sense. Ohio, a lot of drought issues in parts of that state. I know the bean yield for Ohio is down almost 7% on this report, but yet some of the other state estimates are a little bit of a head scratcher. I think about Minnesota in particular, in my opinion. And I know USDA used in this report, this is with actual field sampling combined with farmer surveys and things like that. So I'm just curious, I guess, looking at some of these state-by-state breakdowns, and I know everyone's going to be analyzing these over the next several days, Brian.
Well, there's certainly some room to kind of question or skepticism. On the other hand, I'm amazed that every year that the corn plant, it's just an amazing thing. It just seems to, and farmers are amazing. And we can't forget the efforts that this spring when it was so wet and there's so many pockets and that farmers still went at it, planted. But goodness, 183 bushels in Minnesota, that seems high to me. That's only off 1.1% from a year ago. And I had plenty of farmers in Minnesota say they had record yields. So, and I've had plenty of farmers in Minnesota, especially one. Now, I don't want to take one example, but and this is a story. So his friend, anyways, flew in a plane from western Minnesota through to Oshkosh, Wisconsin for the EAA, and said it just looked terrible. Especially you could see all the pock marks and holes in the field and all the sins of spring. So that one's kind of got me scratching my head. Now Ohio down 5.6% from a year ago, still at 187. You look at the drought monitor map, and that state has been in trouble for a while. So I do want to question that, but there again, maybe it's a drought tolerant plant. Uh, Boy, Missouri, 18.3% higher than a year ago. Wow.
Mhm.
I just talked to a farmer in Missouri. They're in their third year of drought, and they're kind of thinking about what they want to do with their future at this point, just because they haven't gotten. So anyway, lots of numbers that kind of reflect good crop production, good weather. Some I think are a little bit more robust than I would have expected.
I know that on the recent rally we had, and some folks and talked about this. We've talked about it, touched on it. Some were saying, "Okay, is maybe the harvest low in already? Can we get this seasonal rally going early ahead of harvest?" Some have contended that maybe not so fast. We might be, we might have a leg lower here before we get into that seasonal rally window in the grains. As you look at these charts, I mean, what stands out to you, Brian? Do we have to worry about major downside risk here still as we get the combines largely rolling here across the Midwest?
Yeah, unfortunately, I think it's still a potential, and I've got to encourage farmers to just recognize that we're so December corn 406. I mentioned the low there 385. We had some really nice reversals down there. And then we had a high last Friday come in at 416, and by the end of the session, we're at just 406. So that was a big negative reversal at the top of that good rally early in the week. And so you've got a bearish key reversal, you got a bullish key reversal, you got harvest pressure, and then you've got some question as to what this yield looks like. I think that the long-term picture, the bulls have kind of had a victory here the last 20 or 30 days. We're above certain moving averages, and you think about it, we're above the average price for the last 50 days. So you got to argue the market's consolidating, but the problem that you have with getting a little bit too far over your skis and saying a low is in, it is only September 12th, and the bulk harvest is coming really quick. And if in fact the yield is a record yield, there will be extra bushels that need to go somewhere. And I'm just a little bit concerned that any rally or the rally we had coming into this week or the end of last week is going to price bushels and keep the pipeline somewhat full. We just don't have enough robust export market activity, and perceptively the worry is that China's already kind of front loaded what they might need because of low water levels and rivers and things. And so I don't mean to drag this out, but I'm not sure yet. I'm not sure. I kind of thought with this dry weather, I think the yield number might actually kind of edge down to 180, 181, and here we are even higher, 184. So that leaves room open for downside price pressure.
Yeah, no, good thoughts there. And I definitely think it's something that we're going to have to watch closely here moving through the onslaught, the gut slot of harvest. On the wheat side, U.S. numbers were left unchanged. The global ending stocks, I know, went up a bit, even with a cut to EU wheat production. I know in terms of December Chicago wheat, we've been flirting with some overhead resistance here, trying to get a breakout to the upside on that chart. What's your perception of the WASDE for wheat and how these wheat markets have been acting here lately?
It can only come to one conclusion: slowing world demand, global economics. Because rarely do you ever see where you carry out the same or lower it and then see price lower. That's usually a pretty strong inverse. Well, so I think what it tells me is we've got a tepid world market at this point. But boy, wheat is a crop that's produced round the year, the whole year, round the year, 12 months out of the year. It's harvested 12 months out of the year. It's grown in every major producing country in the world, and so stay tuned. But I would continue to argue that the wheat market is somewhat precariously priced, given that if you take even Russia out of the picture, or let's say China out of the picture, there's just not a lot to go around right now. So with that continuous concern that we're seeing the dry conditions in the Southwest, now there's rain in the forecast, but El Nino flipping to La Nina, uh, drier conditions in the general Black Sea region. Um, I don't. The wheat market's been kind of telling us something different. It's been holding in there, I think. Well, it's got a strong inverted head and shoulders formation. December wheat futures reached its highest point today since mid-July. There's some strength underneath this market. If that inverted head and shoulders formation has any merit, you're looking for a December wheat contract. Chicago could add mm, 60 cents on to a breakout above 580-ish area, so 640, and that put us, back to where we were mid-June.
Good things to think about there, and especially with just the dynamics of that global wheat picture. I think it's very key to think about. We're talking with Brian Doherty, Senior Market Advisor here at Total Farm Marketing. Let's go over to livestock, Brian.
Yep.
Cattle, good follow through there on Thursday, triple digit gains. I did notice this nugget though in the WASDE that caught my attention
Yeah.
for cattle. The quarter four cash price was cut a whopping $7, 183. The Q3 price was cut $5 to 188. Now, that didn't seemingly have an impact on futures on Thursday, but I wonder if that could have an impact here in this broader cattle market moving forward.
Yeah, and I was looking kind of through the bowels of it too, and what I get is there's a general perception that because of China's slowing economy, China's imports of beef are expected to decline. Plus, they have plenty of pork, it seems. So the USD did say that the lower dollar, or I'm implying the lower dollar, that you see exports improve. But I think it goes back to what I just kind of referred to in the when we're talking about wheat, is that I just think that the USD is acknowledging that this is not a robust world economy. We're having some expectations now for interest rate cuts. I think Germany made a cut today, I think, and USDA should make a cut. So it's the idea of slowing demand. Um, Nonetheless, seasonally time of year when cattle prices have some struggle, they've been right on board. But I got to tell you that the close the last two sessions and then four sessions ago, big turnaround. The charts are starting to look like they're signaling that the market's just done being defensive. And so we need to see there is some development of cash. It looks like at least steady, if not higher, this week. So inclined to believe that the board is reflective of that and reflective of just this kind of bigger picture perspective that we have to go back to the limited supply or availability of the beef herd.
Well, I can kind of rope the hog side in there too. Not much in the way of major changes for pork production in the WASDE, but just kind of with the economic thought there that you brought in. And I know this week we've had the consumer price index, the producer price index all out here, mostly meeting analyst expectations in the US, setting the stage for the Federal Reserve meeting here this next week, where sounds like a 25 basis point rate cut. And I'm no economist. I learn from economists and analysts such as yourself. I'm like a sponge. I try to take it all in. I'm not having a rosy feeling about the overall health of the US economy or the global economy. That's some pretty poor Chinese economic data here recently. Again, I'm skeptical, I guess, Brian, with this economic picture and how it could tie itself into grains and livestock here as we go into the fourth quarter, Brian.
I'm right there with you. I think you have to be skeptical because the market has reflected that. So the futures market, while it holds at a higher level, as an example, we're talking about for instance, the December contract here a few minutes ago, holding a low 170s for the entire year, and then rallying a couple or three times close to 190 or above 190. So range bound, but spending a lot of time lately closer to 170. I think that's just reflective of a growing reality that the world economy, such economic environment is challenged, and thus why you're going to see some interest rate cuts. But I wouldn't look for quarter point or half point to have any bearing on the cattle market at this point. And that takes a long time to get kind of worked back in the economy. So they talk about a soft landing. That might be the case. I think big picture, the world's growing every day. We're going to have demand for beef, but I will continue to live by my statement that I think we get another $6, $8, $10 on this. That's all you're going to get. It seems like demand dries up, and the push toward lower pork or chicken or poultry prices is the trend that we've seen develop.
Anything new on the dairy side of the equation? I know, I think we talked last week, some volatility there. We're still seeing that
Sure.
volatility continue in the dairy trade, Brian?
Yeah, you are, and you saw interesting in the cheese market. You saw a 5 cent gain in the barrels, but you saw a 3.5 cent drop in the blocks. The futures price, as we speak, is mixed to 20 lower, but new contract highs scored this week on many contracts. Just an impressive run up. Most of those came yesterday. I like to chart, multiple months, and just as an example, I've got the average price September, October, November, December. So this month, the next 3 months to the end of the year, right now 2304. And yesterday that average got as high as what did I say we were here? 2346. And we're just toying with some historically really high numbers. Cheese prices is the same way, and butter prices. So product components really moving the market. We talked earlier in the year. I remember we had conversation week in and week out saying that, gosh, it just doesn't seem that this market can get traction. But it did, and once it did, it's like pulling the rubber band, snapping it. It's a really steep uptrend. As an example, since late spring, the market has added at least $5 a hundredweight. And so you might say, well, what is that? What does that mean? Well, if I take $18 milk and or five divided by 18, you're talking about a 28% increase. That's a big increase in anything, right? 28%. So it's alive and well. Good, strong market right now. And over time, this is all reflective of a tighter supply, and then breeding cows for beef rather than for dairy. And this is the end result of it. Is a good bull market. It'll probably last several months, and then the herd will begin to grow, and consumer demand, I don't think, can gobble it up. It never has when we get to the 23 area.
Great stuff, Brian. Yeah, great stuff as always. As we close it out today, final thoughts, anything you want to reiterate to folks?
Oh, I write a weekly column called The Perspective, and what we did this week is we're reflecting on, what happened in the marketplace, and one of the things that I'll just mention is keep, especially like on milk, or if cattle rebound, corn rebounds, make sure from a longer term perspective, maybe in particular, look at the put option market as a way to floor, leave the top side open. We're good at production. We know that. If consumer demand lessens, or if we have just a little more production in the pipeline, things get negative. So sharpen the pencil on all your tools.
Brian, if folks want to reach out to you for a conversation and talk with you there at Total Farm Marketing, how can they get in touch with you?
Great question, Jesse. 800-334-9779. That's the phone number that you can give us a call. Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Good resources for you. Love to talk with you. Don't hesitate to call.
Brian Doherty, always good to chat with you, sir. Thanks for joining us. Have a great weekend. We'll talk to you next week.
Thank you, Jesse. Appreciate it. Take care.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.